Market panel today, Adam Lashinsky, Fortune's executive editor, Jonas Max Ferris, the MaxFunds.com founder. Both are Fox contributors. And I'll point out
$12.77 is the earnings per share
right
now in Alphabet. $12.77 versus $10.82.
Just coming out, guys, better than expected. The revenue is also better than expected, as Ashley Webster will tell you before we talk to the two of you live from the newsroom. What are you seeing, Ashley?
The actual revenue coming in at $39.28 billion. That indeed is a beat. Of the estimate was $38.93. Don't forget, in the last quarter, they actually missed on revenue, Google, so that's an improvement. Just looking at the quarterly cost per click on Google, down 29%, but the paid clicks year over year, up 66%. That's strong. Just looking also at the operating margin, that is down. It was 25% in the last quarter, down to 21% in this quarter. But the TAC, the traffic acquisition costs, what Google pays, in other words, to have people diverted to their properties, that coming in a little less. They paid less than expected, $7.44 billion. The estimate was over $7.5 billion. So better news on the costs to get people to their sites. But overall, the headline numbers, guys, Google beating.
Yeah, absolutely. Ash, thank you very much. Yeah. Adam, I'll go to you first on this. We're going to get Deirdre Bolton involved as well from the New York Stock Exchange, along with Adam and Jonas. And, you know, at first glance, Adam, as Ashley says, these look pretty much across the board like good numbers. So what are you picking up, though?
With the one exception of that decline in the profit margin, which I thought was an astoundingly large number, so we'll see if that was right. The good performance is exactly what we would have expected given Facebook's good performance last week. And I think where people in the media industry's minds will go to is that these two companies are hoovering up all of the advertising market. And so as we're seeing all these new media companies like BuzzFeed and Vice and others have big layoffs because their business is terrible, Google and Facebook's businesses are quite good.
And Adam, on to something there with the after-hours turnaround now in the stock. As the numbers first started, Jonas, to cross the tape, the stock, which was up 2% in the regular session, went up, and now it looks to have turned around. It's down 2.3% after hours. But overall, what's your impression?
I got to say, that's not good. If that cost per click number is right, that's what brought down the 2000.com crash, if we all remember. Like, you used to get a really high ad rate, and then there was so many websites started, so much stuff that the actual rate collapsed. It was a recession ultimately, too. You know, they've already hit like half the digital advertising market when you combine them with Facebook. So they're going to hit a point where that market's only going to grow as big as GDP globally. It's not going to keep growing 20% a year forever. So if they have problems making money or keeping their margins high or keeping the click rates high or not being able to get people into the cloud business, which is basically kind of squeezing their existing user base, it's going to be a growth problem here, not this quarter or next quarter, but like a few years down the road. They're going to run out of ways to make money out of advertising, and if the rates come down, it's not good. So you would think the stock could be way up because you're talking about a huge beat on earnings per share and revenue. That's top line and bottom line. That's what we weren't seeing out of a lot of other companies, and yet these numbers are right. It's weak, and I think it's because this business model is going to run into future problems.
Let me go back to Ash real quick. He says he has more before Melissa. Go ahead.
Yeah, sorry, Colin. I just want to follow up on this cost per click on these Google properties. It is a big number, down 29%, but it's been declining quarter by quarter. So in other words, they're earning less each time someone clicks on a search ad. And that's a big part of obviously their business model. So when that's down 29% and has been declining quarter by quarter, then that's reason for concern.
Down 29% year over year. Melissa?
Two more little pieces. Cash and cash equivalents on hand at the end of the fourth quarter, $16.7 billion. I'd be interested in the panel's reaction to that. And you go back, I mean, you're toggling back and forth between those click numbers. I see the cost per click, but paid clicks versus same quarter previous year, up 66%. So I don't know. I mean, if you guys want to, for the audience, kind of tell them what is the difference between those stats and why it matters.
Adam,
paid clicks.
Adam, you want to take that?
No, I don't have them in front of me, so it's hard for me to take that without thinking about it.
That's fair. Go ahead, Jonas.
Paid clicks will go up if you acquired a competitor. I mean, that's just the amount of people clicking. Or if you're growing the business as far as traffic, you're going to have an increase in paid clicks. But if people are paying a lower rate per click, that's a problem because, you can make it up on volume, I guess, like the change bank on SNL. But at the end of the day, like you can't have the cost per click rate decline. It either means a combination of the demand to pay as much for advertising is
Right.
going down, which, by the way, this company's under a lot of heat for overdoing the privacy stuff, particularly abroad. This is what you would expect to see if they couldn't squeeze your data as much as they want, because you wouldn't pay as much for a click over ad because it's not as targeted. It's not as targeted because they can't take advantage of your privacy. So there's a lot of warnings in that number. It could just mean a recession. Small businesses don't want to pay as much for ads. They're not getting a good result. So there's a lot of scary stuff.
Go ahead, Adam. Go ahead.
So, Jonas, I mean, I think what you're saying is very interesting, and yet there's this beat on both the top and the bottom line. So we're going to have to reconcile that. The two quick thoughts is that the cloud business and YouTube, as we suggested earlier, might be better than what people had thought. But somewhere those two, that inconsistency needs to be reconciled.
By the way, the call's the bottom, which is kind of early. The call's at the bottom of this hour, the conference call. So maybe we get a little bit more detail there. The other thing, as Melissa pointed out, was cash on hand. And I know one of the questions coming in about Alphabet was whether there'd be a new buyback program instituted since the old one was expiring. So that's something to keep in mind or ask questions about as well. Deirdre, your take on this? We haven't heard from you yet, but your take on the numbers?
I haven't chirped in, but I would agree with the panelists that if you have clicks down 30%, that does not bode well. And I think what Adam covered so well is that with Facebook and Google, they have more than 2/3 of the digital ad market in the U.S. And don't forget, there is now a third player. Personally, when Amazon released its results, that was the part I was most interested in, is that Amazon, I'm not going to say is anywhere near those two, but it is very much encroaching on the territory. And then as an addendum to the YouTube part and trying to basically guess, that's all we can do right now, along with the analyst community, just how much that means to Google, to Alphabet Google. You know, as I mentioned, one analyst telling me it's probably $20 billion worth of annual revenue for YouTube, but there's also, most people say it might just barely, that particular unit may still just barely be profitable. So it's a lot of what you're talking about. There's a lot of muscle, there's a lot of size and scope, but not sure longer term what that means to the company's continued profitability. It's probably going to be less than we've seen in the past.
If I could jump in real quick, I mean, one of the things that we're looking at the stock price, if you're trying to figure out why it's down more than 3%, it did see a big rally into these numbers today, because this is another one of those companies that tends to sandbag and then comes out with better than expected. And today, in the lead up, as people were anticipating these results and kind of looking at the tea leaves, it had gone up quite a bit. So it's not necessarily
I would say
a reaction.
just a positive sign on the cost per click thing, because I think that's what their quiz is boiling down to. If you were growing more abroad or in emerging markets in the U.S., that would be a normal thing, because a customer acquisition isn't as valuable in a place that has a customer doesn't spend as much money, essentially. So that could be explained. Again, we don't see a breakdown here or exactly what's going on.
If I may, I think, Melissa, that's a great point. I mean, I was listening to the news at the top of the hour and thinking there is no good news out of Apple in the last handful of days. It's been a bad story, and yet they were up strong. So I think perhaps you're onto something in explaining the stock price movement for Google so far.
It raises, well, this could be an interesting call. We'll see how it comes out at the bottom of the hour, and maybe we'll go back to Ashley later this hour and get some details on this. And Deirdre, thanks. Adam, thanks. We usually point out for disclosure, by the way, that Adam has a special relationship with the Google. Isn't that right? I know your wife.
I am a Google spouse. That's correct.
Yes. Right. Through marriage, not through. Right. And Jonas, thanks as well. We appreciate it.